This is a review for Friday trading, analysis. It's a technical analysis for Friday trading, April 5, 2024. This purely technical analysis. Why long entry is enter. So the analysis should be in detail. If you look at the daily chart of the ES futures, S&P 500, as you can see, I think I showed this candlestick pattern in SPY chart last video. This one I show you again. You look at the red arrows. The first look at the red arrow except the number 3, this one here. This one I think I got it wrong. But the first arrow in November, the small red bar close below 3 days low ago. 3 bars lows ago, I should say. It closed 3 bars low ago. It's a small sell-off. It's not a big sell-off for the November, this one. Then next day, no follow-through. Didn't even test it. Didn't test the bottom of the previous day. And look at the December 20, same thing. The close of the bar is below 3 bar ago. It closed below 3 bar ago. It's a quite a good size sell off. What happened next day? No follow through. And it didn't test the previous day low. So look at this one, not this one. This one's wrong. Okay, I don't think it should be counted. Okay, look at move on next one here. January 31st, or should be February 1st. I think the day here is a shift. Okay, this is January 31st. This one. Again, there was a sell-off. It closed, more than 3 days ago low. And what happened next day? Bam, bounce up again and kept on going. And look at this one. This one, February 13, happened same thing. So for this year, this no follow through pattern repeats itself again and again. That sort of give me confidence to enter a long trade here. That means it gives me a signal. It should bounce. The next day should bounce. I could be fooled, by this, pattern. So, in order to prove it right, in order to prove it there will be a good retracement the next day. Let's look at 15-minute and 60-minute chart. When I look at the 60-minute chart at close, on Thursday close, look at RSI. As you can see, it was in the oversold area. And look at 15-minute chart, RSI, same thing. It was oversold area. So when this is a futures, so it's it runs 24 hours. So the next when the market opens in the evening, look at what happens. It tried to test the low, but it failed. Look at this candlestick here. It tried to test the low, try to break it below, but it failed. It just closed above it. And we have one more chance to prove this is a good long trade. There's another one here after the economic data. I think it's a jobless claim came out. The data came out. I think it's the economic data jobless claim. When data came out, it tried to hit the low again, but it failed. Pretty much, this is a very strong bullish signal. And then from now on, it went all the way, to 52.63 above. That's a good retracement. But what's going to happen next for Monday? For the next Monday, if you look at the daily chart, 5-day and 10-day both are resistance now. And Monday, the 5-day should cross 20-day. When that happens, I assume, I'm going to tend to be bearish if it close below. If next Monday didn't close above 20-day moving average on daily chart. And look at 240 minute. It's obvious, this is it's forming lower low, lower high. In order to have a reversal turns around upward, it has to, has to make a higher high, higher low. So far we have a short, lower low, lower high. It's slightly bearish, it's not market crash, but slightly bearish to the downside. So what's the target if it hits below Friday's low? And also look at daily chart. Now Friday's candlestick bar is inside bar now. It's an inside bar. That means we should look for a breakout, either upside or downside. It could go both ways. If it breaks above the Thursday bar, that means it's a bullish. If it breaks below Thursday's low, that means bearish. Let's look at how far down we can project it. Let's make a projection for the downside first. If next week breaks Thursday's low, if next week breaks Thursday low, if next week breaks Thursday low, let's see, that's a projection. If next week breaks Thursday low, already drew the retracement extension. So if 200%, it will be 5075 level. It will go all the way down. That means it will break below 50-day moving average. Don't forget the 5061, the trend line, the green trend line. 5061 is a small gap. Usually futures don't leave a gap open, unlike SPY, we see gaps everywhere, but for futures it's very rare to have a gaps open. So we have even a small gap. It's about how many points? 78. Yeah, it's about 19 points gap. It's quite significant. If I'm bearish, that's the target. And also so 200% doesn't break below Thursday's low. If it goes up and breaks above Thursday's high, That means you can do the math. You can add another 100 points on top of it. The high on Thursday highs was 53.08, so add about 100 points, so it will be 54.10 level. So watch out for this too. Since we're a big sell off, either side, it's going to be a big move for sure. So how do we trade then? Well, guess I have to trade level by level. I don't have a crystal ball, so I don't know. One more last thing to show. I'm not going to show more indicators here. Maybe in the future I still have other signal pointing. I'm not going to say which way, but give me a hint which way I should go. Let's look at 240 minute. As long as it is lower low, lower high, I assume bears are in control, right? If it turns around, then you have to be bullish. Otherwise, be bearish for now. Is I would say it's safe. So next week, hopefully we can get some points. So good luck. Next week, you have a great weekend.